let's go to Charlie Bobrinskoy right now from Ariel Investments. He's joining us and also happens to own Microsoft. So, Charlie, we have the results out. Looks like they beat the street estimates for profit by a lot, 77 cents over 68. And they beat on the revenue side as well, almost $20 billion. And we were looking for only 19.1. But it looks like we're still not sure about PC sales, about Windows sales. Connect is doing very well. What do you think about Microsoft?
I'm very disappointed. I thought I was going to come on before the close and tell you how they were going to beat this estimates, how the street was being too negative, and then I look at your producer's notes. She's going to have that. But anyway, no, I think the story on Microsoft, every time I talk to people about Microsoft, they all remind me about what a dog the stock has been for 10 years, how it's been dead money for 10 years, how it's not growing as fast as Apple. And all of that is true, but it's just not as bad as people think. The stock is at about 11 times earnings. It's at a discount to the market. The earnings are growing more than 10% a year. Windows 7 has been a huge hit, and Connect is doing very well. So, and their emerging market opportunities are huge. So it's just not nearly as bad a situation as the stock would lead you to think.
So why don't we see it in the stock, Charlie, just quickly?
Well, we're starting to. I mean, when you had me on first, I think the stock was about 24. I want to say it was around 28 today. I think it's going to close over 30 tomorrow. So we're starting. It's got a lot of cash flow. There's a lot of these big quality company stocks that haven't performed but are now so cheap that they're going to start to perform.
All right, let's joining us now is someone else who can talk with us a little bit about Microsoft. Robert Breza is an analyst at RBC Capital Markets. Bloomberg ranks him among the most accurate analysts for Microsoft. And let me just ask you, Robert, before we hear the closing bell, why do you think we don't see it in the stock? I mean, over the last 5 years, it's not moved at all. Over the last 10 years, Microsoft is up 5%. What do you think the story is with Microsoft's dog of a stock here?
Well, I think the underperformance is really blamed on the consumer portion of the business, which is about 40% of overall revenues. You know, and they kind of suffer from a consumer hangover as they often get compared up against Apple for missing the opportunities, you know, within search and within the mobile environment. I think, you know, really to the prior person speaking, you know, his comments around the business side, Microsoft's been executing extremely well on the business side. And I think as people start to really focus on Microsoft and what they're doing with their cloud computing effort, with their Azure platform, also with their new Office 365 application that sits in the cloud. Hopefully that will start to get the company a little bit more respect. Clearly that helps them establish their franchises within the Office kind of workplace environment in the business world, and moving that to the cloud is a great way for Microsoft now to kind of start climbing out of the doldrums and being recognized for some of the innovation they've made.
Hey, if you look at that Microsoft stock today, it did kick up initially after that early release of its earnings, but ending little changed on the days. Tell me what you think was going through investors' minds initially that shot it up and then said, maybe not so upbeat here.
Yeah, well, I think, you know, when you first looked at the headlines, you know, the revenue numbers coming in at $19.95 billion, you know, that's significantly above consensus, which was around $19.15. So, you know, over a $800 million beat, you know, versus consensus. And then, more importantly, a lot of that dropped to the bottom line, coming in at 77 cents versus, you know, the estimates for around 68 cents. I think, and then what kind of caused the pullback is as you went through the numbers a little bit, you know, cash flow came in a little bit light, coming in at around $4.8 billion. Consensus was around $5.1 billion, so about $300 million light on the cash flow side. And then really, you know, looking to the future, the deferred revenue came in slightly below where I think most estimates were, coming in at around 13.4. And the consensus was around 14.1 for deferred. So, you know, the shortfall in deferred revenue by about $700 million, but really you got a lot of that in the revenue line with the upside around 800. So overall bookings were still about 100 million better than where I think the street was.
I just want to quickly show the stock here, which, interestingly enough, I'm going to show it to you on my Bloomberg, which we are running on a Windows-powered Apple computer. I just think it's very interesting and kind of a little bit schizophrenic here. But take a look at the stock in the intraday trade. Carol is saying it came up and then shot back down. I'll zoom in on basically the last, let's say, 40 minutes of trading here, and you can see where that happened. Maybe zoom in a little bit more, and you could just see this sort of schizophrenia in the trade. I mean, people originally saw the numbers and they shot up, and and then they came back down. Interesting, and I want to ask you this, Charlie, because it speaks generally more to earnings, well, to Microsoft as well. But, you know, we're seeing Microsoft beat on the revenue side. With other earnings releases, we've really been looking for this. Everybody knows you can massage the EPS number as much as you want, but it's tough to beat the sales numbers. Adam says you can't just produce sales with accounting tricks. Are you impressed with this sales beat, and what have you seen as far as sales movements for other companies that reported earnings?
I think you said it exactly right. It's been tougher to get revenue beats, and it has been easier for people to use stock repurchase or lower interest expense or maybe some tax management to beat on the EPS side. But that's a big revenue beat for Microsoft. I want to go through it myself. I haven't gone through the numbers. But, you know, and then I want to come back to why this stock hasn't worked. The reason it hasn't worked is because it was an overpriced stock 10 years ago. It was probably an overpriced stock 5 years ago, trading at 10 years ago, 35 times earnings. It's now a cheap stock, trading at 11 times earnings. So you just have to look at it fresh.
Yeah, but, you know, Charlie, I can go to the dollar store and buy a lot of cheap items. Doesn't mean I necessarily want them. Tell me, where is the real value here in Microsoft in the future?
Because around the world, people are going to be using more computers. And a huge percentage of those computers are going to be running Windows. In America, we're all focused on the latest Apple computer. Windows is still the dominating operating system. Try sending a Word document to somebody in some system that's not a Word document, that's an Apple document. It just, you can't open it. Try being an engineer and running on an Apple platform. You can't do it. Microsoft is the standard.
Can you, Robert, let me bring you into this. Can you, or does moving into the cloud give other operating systems an opportunity to really chase the market share of Microsoft, or does Microsoft own the operating system globally, even in the cloud?
Well, I think you know, the operating system has a place, but I think overall, when you look at the cloud computing and what Microsoft is doing with their Azure platform, really it's all about getting data into the cloud, and whatever operating systems on that device use to access it. The ultimate goal is to get that data in the cloud, then have the developers, and Microsoft has a huge development community that they can capitalize on. Those developers will be developing on that Azure platform, really, you know, setting the standard for the next 10 years in software and technology. So I think when we look at cloud plays from a software perspective, the ultimate goal is to get as much data as you possibly can into that cloud. And Microsoft is set up very well here for the next 10 years in terms of trends of computing. Yes, they may give up some on the operating system side with certain devices, but it's ultimately controlling that data, controlling that developer in the cloud, and that's where Microsoft is headed. And I think, you know, investors are just failing to recognize that. I mean, we have other cloud plays like a Salesforce.com who are doing very well out there, but Microsoft is kind of the unrespected, you know, bad boy here who's been left behind.
Your final thoughts here, certainly on Microsoft.
Well, I think overall, when I had a chance to go through all the segments, you know, the Windows segment revenues came in a little bit light. All of the other divisions came in above, you know, consensus numbers. So overall, I feel good about the report here. You know, management reiterated their expense guidance, so we should expect to see some further upside, you know, in earnings here as we get through the conference call tonight and get a chance to kind of redo our forecasts.
All right.
I want to quickly ask Charlie, because he's a value investor. And Charlie, Netflix, do you think it's way beyond normal now? Only 10 seconds.
I never bet against Reed Hastings. He is brilliant. He has made that company out of nothing. Never bet against Reed Hastings.
But you don't own the stock, do you, Charlie?
No, I shouldn't. Don't remind me, Carol. I should have, but it's never been cheap enough. But he is so smart.
All right, we got to run. Charlie Bobrinskoy, we appreciate it.
And Robert, thank you as well.